Hello students, welcome to APG Parsala. I am Dr. Sanjeev Sharma from Government College, Nadon, Himachal Pradesh. Today we are going to talk on module Goodwill, Nature and Accounting Treatment from paper Accounting and Financial Analysis. After studying this module, the students may be able to understand the concept of goodwill, nature of goodwill, various characteristics of the goodwill, various factors that affect the value of goodwill and accounting treatment of goodwill. Goodwill of a business mean good reputation, popularity, image of the firm in market. Goodwill works as a magnet for business to attract more and more customer towards it. Goodwill helps the business to earn excess profit over normally earned profits. Goodwill is treated as an intangible asset, the asset which cannot be touched or seen but can be felt. It is created through various activities such as quality production, quality relationship with employees, integrity, sincerity, etc. Goodwill is concerned with the business as it cannot be sold separately from business, unlike goodwill, plant, machinery, furniture, etc. Different authors' view regarding goodwill are given here. According to Edmondson, just as the cement binds together the bricks and other building material into walls, similarly, goodwill binds together or unites the other assets or aspects of the business into cohesive whole. According to Kohler, goodwill is the present value of expected future income in excess of a normal return on the investment in tangible assets. According to Maggie, the capacity of business to earn profits in future is basically what is meant by the term goodwill. According to Lord Magneton, goodwill is a thing very easy to describe but very difficult to define. It is the benefit and advantage of name, reputation, connections of a business. It is the one thing which distinguishes an old established business from new business as it first starts. Goodwill is composed of a variety of elements. It differs in its composition in different traders and in different businesses in the same trade. Special features of goodwill. Goodwill of the firm has some special features and it therefore distinct from other assets. These features are intangible asset. Goodwill is an intangible asset, cannot be sold in part or in isolation. Goodwill of the firm cannot be sold in part or in isolation as it's the value of the firm in terms of reputation. Subjective valuation. The valuation of goodwill is subjective, not objective, because its valuation will differ from estimator to estimator. Value of goodwill changes. Value of goodwill changes from time to time with changes in factor of goodwill, as there are various factors determining the value of goodwill. Factors determining the value of goodwill are shown in present slide. Goodwill is affected by a number of factors such as business nature, risk factor, monopoly, location factor, government support, management efficiency, exceptional contracts, future competition, pending contract, capital requirement in future, profit trends, money and market conditions. These are the factors which affect the value of goodwill, and these should be considered by evaluation of the goodwill. Demand. Some goods are of daily use. Demand for such goods is constant and the profit fluctuation is minimum. On the other hand, if business is influenced by fashion, public taste, the demand for such goods is temporary, which leads to unstable profits. Thus, more stable or constant is the profit, the more is goodwill, vice versa. Simple words, there is direct relationship between demand for the product and goodwill. Risk factor. When risk is less in the business, it creates more goodwill. But if risk is more, it creates less goodwill. Monopoly. Monopoly in the business gives jump to earning. If buyer of the business feels that monopolistic situation will continue to exist in future, he would ready to pay more for the goodwill because he is assured of future profits. However, if there is possibility of rivals setting up same line of trade, the advantage of monopoly may not continue to be derived.
Government, people are willing to pay the product of such a company, thus goodwill increases. Management efficiency. Efficiency of management plays an important role in the earning of profits and valuation of goodwill. A good and dynamic management will certainly make optimum use of its resources. Location factor. A manufacturing concern which have easy access to quality raw material, quality labor, and near to big market will have advantage over all other concerns. It enhances the value of goodwill. Exceptional contracts. If the exceptionally favorable contracts for the supply of goods or services to the customer are not likely to continue, the profits from such contracts will not be considered while determining the value of or amount of goodwill. Future competition. The possibility of future competition, either be the previous owner or be the new rival, will adversely affect the value of goodwill. Pending contract. If they are pending contract or order which are likely to fetch substantial profits, this will certainly increase the value of goodwill. Capital requirement in future. When the profits of the firm into the investment of capital, the value of goodwill is higher than business earnings, less profits, large investment of capital. Profit trends. When there is upward trend in profits, it increases the value of goodwill. In contrary, if the profits are gradually declining, the value of goodwill will also diminish. Money and money market conditions. Where money market condition is easy, more buyers will available in the market and the value of goodwill may go up. On the other hand, if money is scarce, the value of goodwill may come down.
Nature of goodwill. Goodwill is an intangible asset which cannot be seen, touched, melted, broken. It is a fixed asset of the business. However, like other fixed asset of the business such as building, furniture, plant, machinery, it cannot be sold separately during the life period of the business. For example, building, plant, furniture can be sold and purchased individually at any time during the regular course of the business, but goodwill cannot be sold while doing the business. Goodwill is indetachable from the business. It can be sold, realized only when business is sold. In other words, goodwill is transferable only in the event of sale of business. Goodwill is related with the profit of the business. If profit of the business are increasing, goodwill will also increase, as there is a direct relationship between profit and goodwill. To contrary to this, if profits are decreasing, the amount of goodwill will also decrease. Goodwill can be classified into two categories: purchased goodwill and self-generated goodwill. Purchased goodwill means purchased goodwill arise on the purchase of a business. It is shown on the balance sheet under the head non-current assets. Self-generated goodwill. It is generated by the firm internally. Generally, over the years, it is not recorded in books of accounts. Accounting Standard 26 is related with it.
Goodwill can be of two types, and the type of goodwill for the purpose of recording is cleared with in this figure. Goodwill can be of purchased goodwill or self-generated goodwill. Purchased goodwill is shown on the balance sheet under the head non-current assets, whereas self-generated goodwill is not shown in the books of accounts. So, the figure shows that only purchased goodwill is recorded in books of accounts, whereas self-generated goodwill is not recorded in books of accounts. and further the purchased goodwill is shown in the balance sheet under the head non-current assets.
Goodwill is an attractive force which brings in customer. Goodwill can be classified as cats, dogs, rats and rabbits. Cat goodwill. The cat prefer the old home of the person who keeps it and stays in the old home although the person who has kept the home leaves, and so it represents the person who goes to old shop, whoever keeps it. Dog goodwill. The faithful dog is attracted to the person rather than to place. He will follow the outgoing owner. If he does go too far away, it is short of personal goodwill and generally found in professions. Rat goodwill. The rat has no attachment either with owner of the house or with the place. Rat is interested only in filling its stomach no matter where things come. So certain customers who are neither attached to any owner of the business nor to any shop, such type of goodwill has small value or no value. Rabbit goodwill. Rabbit has the habit of living close and is afraid of going too far. There are customers who neither attract value to the owner nor shop but to nearness of the shop. Such type of goodwill has a low market value.
Different categories of goodwills are shown in this figure. Goodwill can be categorized as cat goodwill, dog goodwill, rat goodwill or rabbit goodwill. Cat goodwill is related with the place. A dog goodwill represents the personal goodwill. It is found in professional organizations. Rat goodwill is simply the goodwill which has the small value or even no value. And rabbit goodwill has low market value. Recommendations of Accounting Standard 26 issued by Institute of Chartered Accountants of India regarding treatment of goodwill should be considered. Whenever goodwill treatment is done, this standard should be considered. And as per the Accounting Standard 26, it is mandatory that goodwill is recorded in the books only when some consideration means something in return, in money or money's worth has been paid for it. This implies that goodwill account can be opened in books only when goodwill has been acquired by paying some price. The accounting standard makes it clear that goodwill account cannot be opened in the books of account at the time of admission, retirement, death of partner in case of change in profit sharing ratio of the partner. Sometime at the time of changes in the constitution of the firm goodwill, firm is evaluated. In that situation, the value of goodwill is not brought to the books since it is interest goodwill. In such situation, goodwill is adjusted through partners' capital current accounts. Treatment of goodwill on admission of partner. There are different situations which are acquired accounting treatment on admission of a partner, and some of these are:
Case 1. Private payment of goodwill by old partners to new partners. Whenever new partner admit in the firm, it may happen that new partner pays goodwill to old partner off the record of the firm. That is, privately. The amount paid privately will not be recorded in the books of the accounts.
Case number 2. Cash payment of goodwill. Whenever new partner brings his share of goodwill in cash, there are two possibilities in the business. First is when goodwill money is retained in the business, and second is when it is withdrawn by old partners. So there are two cases, and first case is when goodwill is retained in the business. On the admission of new partner, it is obligatory that new partner has compensate the old partner by paying amount of his share of goodwill. The amount so paid by new partner to old partner through the firm is debited to cash account and credited to premium account. Then the premium account is closed by transferring it to the old partner's capital account in sacrifice ratio. Thus premium account is closed and it will not appear in book balance sheet. The journal entry to be passed in books of accounts. When premium account is brought in cash, cash account debited to premium account. When premium is credited to old partners in sacrifice ratio, premium account debited to old partners capital account. In sacrificing ratio, when goodwill is withdrawn by old partners. In this case, cash introduced by new partner as goodwill is given to the old partner in sacrifice ratio. Subsequently, the old partner withdraw the amount from business. The following entries are passed in this case. For cash paid by new partner as goodwill, bank account debited to premium account. Goodwill is credited to old partner in sacrificing ratio. Premium account debited to old partner's capital account in sacrificing ratio. When premium is withdrawn by old partner's capital account debited to bank account. These are three entries which are passed when goodwill is withdrawn by the old partners. Case 3. Goodwill is not brought in cash by new partner. Sometimes new partner is unable to bring his share of goodwill in cash. Such circumstances, the goodwill account is not opened or raised as per the guidelines of Accounting Standard 26. When capital accounts are fluctuating, the capital account of the new partner is debited with the share of his goodwill and the capital account of old partner are credited with sacrifice ratio. However, when capital accounts are fixed, then instead of capital accounts, current accounts are opened or used. The journal entry will be new partner's current account debited to old partner's current or capital account. Case 5. When goodwill already existing in books of admission. Sometimes at the time of admission of a new partner, there may appear goodwill in books of firm. The reason for goodwill being appearing in books could be that it was brought by old partner in the past, or the goodwill might have been raised in past before the issuing of Accounting Standard 26. It must be remembered that goodwill which existing in books must be written off between old partners in old ratio. The entry will be old partner capital account debited to goodwill account, and it will be written in old ratio. The above mentioned entry to write off existing goodwill is always passed, whether the goodwill is brought in cash or not, and only after passing the above entry goodwill will not appear in the balance sheet or new balance sheet. Case 7. Goodwill is brought in kind by new partner. In case goodwill is brought in consideration other than cash or kind, that is in form of asset, then assets so brought in by new partner shall be credited. After this, premium will transfer to old partner's capital account in sacrifice ratio. The journal entry will be asset account debited to premium and premium account debited to old partner's capital account. Case 8. Old partners do not have goodwill, but new partner have goodwill. A situation may arise where old partners are running their business in losses, hence do not have any goodwill. So in this case, instead of paying off for goodwill to the old partners, the new partners will be paid by the old partners. Accordingly, the old partners will compensate the new partner with their share in total goodwill of new partner. The journal entry will be old partner's capital account debited to new partner's capital account and the share of the goodwill. Hidden or inferred goodwill. It may happen sometimes the goodwill is silent about the existence of goodwill in the business. Under such circumstances, the amount of goodwill which through exists but apparently will have to be calculated. There are following steps. The first step is find out the total amount of the new firm goodwill on the basis of new partner's share and his capital. So firstly, total capital of new firm will be estimated. Second step, Find out the difference between capitals calculated as per step first and total capital of old partners and new partners. This difference is the amount of goodwill. Goodwill is total capital as per step 1 less combined capital of old and new partners. Treatment of goodwill on retirement. A retiring partner has a right to get his chance of goodwill. When a partner retires or dies, he leaves behind the reputation of business which was earned by his efforts only. After the retirement or death, the benefit of goodwill are employed by the continuing partner. Therefore, it becomes a right of the outgoing partner to receive compensation from the firm on his retirement. This compensation or share of reputation calls for treatment of goodwill on retirement or death. Goodwill in general is recorded in books only when some consideration in money or money's worth has been paid for it. In other words, goodwill account can be opened in books only when goodwill has been acquired by paying some price for it. Treatment of goodwill on retirement. The journal entries: write off goodwill if appearing in the balance sheet by passing the entry all partners capital account debited to goodwill in old ratio. Step 2. Find out the share of outgoing partner in goodwill. Continuing partner or remaining partner's capital account debited to retiring partner capital account. Retiring partner share of goodwill is equal to value of total goodwill multiplied profit sharing ratio of a retiring partner. Case 2. Hidden goodwill. It is possible that a retiring or deceased partner may be given lump sum amount which is greater than the amount actually due to him. The excess paid to him over and above claim is called hidden goodwill. Hidden goodwill is equal to lump sum amount paid on retirement minus amount actually due to him. Treatment of goodwill on dissolution of the firm. Goodwill may be treated in following manner. Case 1. When goodwill appear in the balance sheet. If goodwill appear in the balance sheet, it will be transferred to realization account, and if goodwill is realized for any value, then cash is debited and realization account is created with actual amount. When goodwill does not appear in the balance sheet. When goodwill does not appear in the balance sheet, there need not to be transfer any entry, but if it is sold for any price, then cash account is debited.
So students, let us now summarize what we have learned in this module. Goodwill is treated as intangible asset and is created through various activities and is cemented with the business as it cannot be sold separately from business. It is either acquired by paying some cost or it is generated by partners themselves collectively with their hard work, sincerity, work, dedication, devotion, etc. There are certain circumstances where it may become necessary to value goodwill, like at the time of admission of new partner, because when a new partner joins the firm, the old partner sacrifices a part of their share of profit in favor of new partner. Therefore, it is important to record his compensation in the books of accounts. On the death of partner, on a retirement, because the retiring partner has a right to get share of goodwill as he leaves behind a reputation of the business which was earned by his efforts also. When a partnership dissolved, or even when two or more than two partnership firms amalgamated. Thank you.